Preparing for a fund administration and accounting at CSC Global interview. You've reached Candy Mentor, and this video is for you. We'll walk through 15 key questions you're likely to face. For each question, you'll see a sample answer, followed by the key points to cover. Subscribe, like, and share, and drop a topic request in the comments. Question 1. Why do you want to work at CSC Global in fund administration or accounting? CSC stands out to me because it supports clients across the full fund and corporate lifecycle, not just one narrow accounting task. I like roles where accuracy, deadlines, and client communication all matter. In fund administration, small errors can affect investor reporting, NAV, and client confidence, so the work has real accountability. I would bring strong attention to detail, willingness to learn fund structures, and a service mindset suited to CSC's client-focused model. While answering, focus on CSC's role as a global business, legal, tax, and fund services provider. Then connect that platform to your interest in accuracy, client service, deadlines, and regulated financial operations. Question 2. What does a fund administrator do, and why do investment managers outsource this function? A fund administrator is the operational backbone behind a fund's accounting and investor reporting. The administrator maintains books and records, calculates NAV, processes capital calls and distributions, performs reconciliations, supports audits, and prepares investor statements. Managers outsource this because it gives them specialist infrastructure, segregation of duties, and independent reporting. It also lets the investment team focus on deals and portfolio management, while investors gain comfort that fund records are professionally maintained. Make sure to cover NAV production, investor servicing, capital activity, financial reporting, reconciliations, and independent record-keeping. Explain why outsourcing improves scalability, controls, expertise, and credibility with investors. Question 3. Walk me through how you would calculate NAV for a private equity or closed-end fund. NAV is essentially total fund assets minus total fund liabilities allocated across investors based on the fund documents. I would start with cash and investment balances, update portfolio valuations, record income, expenses, management fees, accruals, and any capital activity. Then I would reconcile bank and investment records, review partner allocations, and check unusual movements versus prior periods. Before release, I would make sure the calculation agrees to supporting schedules and the partnership agreement. In your answer, talk about beginning capital balances, investment valuations, cash, receivables, expenses, management fees, liabilities, allocations to partners, and review controls before releasing final NAV or statements. Question 4. How does a capital call work in a private capital fund? A capital call happens when the fund asks investors to contribute part of their committed capital. For example, if an investor committed $10 million and the fund calls 10%, the investor funds $1 million by the due date. The administrator prepares notices, tracks commitments, records receivables, matches cash receipts, and updates uncalled commitment balances. If someone pays late, the fund documents usually define interest, penalties, or default remedies. Be sure to mention committed capital, uncalled commitment, call notices, due dates, pro rata investor funding, accounting entries, bank receipt matching, and consequences of late or defaulted contributions. Question 5. Explain a distribution waterfall in simple terms. A distribution waterfall tells us how fund cash is shared between limited partners and the general partner. Usually, investors first receive returned capital, then a preferred return. Then, the GP may receive a catch-up, and remaining profits are split based on carried interest terms. The key is not to apply a generic formula. I would read the partnership agreement carefully, because small wording differences can change allocations and investor reporting. While answering, focus on the order of cash distributions, return of capital, preferred return, catch-up, carried interest, GP versus LP economics, and the need to follow the limited partnership agreement exactly. Question 6. If a bank reconciliation does not tie, how would you investigate the difference? I would first isolate the difference by comparing the bank statement, cash ledger, and prior reconciliation. Then I would check timing items such as outstanding wires, deposits in transit, bank fees, interest, or payments recorded in the wrong period. If the variance is not timing related, I would look for duplicates, transpose numbers, or incorrect entity coding. I would document every reconciling item and escalate unresolved breaks before reporting deadlines. Make sure to cover comparing bank statements to the general ledger, timing differences, outstanding wires, bank fees, duplicate postings, incorrect amounts, stale reconciling items, documentation, and escalation when needed. Question 7. What is the importance of AML and KYC in investor onboarding? AML and KYC protect the fund, the manager, and the administrator from onboarding inappropriate or prohibited investors. Before accepting subscriptions, the administrator verifies identity, beneficial ownership, source of funds, tax forms, and sanctions or politically exposed person screening. If documents are missing or inconsistent, I would not simply push the file through. I would follow the escalation process because compliance failures can create regulatory, reputational, and operational risk. In your answer, talk about identity verification, beneficial ownership, sanctions screening, source of funds, risk rating, regulatory obligations, incomplete documentation, and protecting the fund administrator and client from compliance risk. Question 8. What accounting entries would you expect around a capital call and receipt of cash? When the capital call is issued, I would typically debit contribution receivable and credit partner capital or commitment-related capital accounts, depending on the accounting policy. When the investor wires funds, I would debit cash and credit contribution receivable. The important part is that entries are tracked by investor, fund, and class where applicable. I would also reconcile receipts to the bank and confirm that uncalled commitments are updated correctly. Be sure to mention recording a contribution receivable when notices are issued, clearing it when cash arrives, crediting partner capital, tracking investor-level balances, and reconciling receipts to bank statements. Question 9. How would you manage a tight monthly or quarterly close when information is missing? I would start by identifying which missing items block NAV or reporting, and which can be estimated or followed up separately. Then I would communicate early with the client or internal team, not wait until the deadline. For recurring closes, I like using a checklist with owners, due dates, and review points. Speed matters, but I would not sacrifice control. If something material is missing, I would escalate and document the assumption. While answering, focus on prioritization, close calendars, dependency tracking, using estimates only when permitted, communication with internal teams and clients, review checkpoints, and maintaining quality under deadline pressure. Question 10. What are the main differences between hedge fund accounting and private equity fund accounting? Hedge funds usually hold more liquid securities and calculate NAV more frequently, often monthly or even daily. Investors subscribe and redeem based on NAV, so equalization, performance fees, and trading activity are important. Private equity funds are closed-ended, use commitments and capital calls, hold illiquid investments, and report valuations less frequently. PE accounting puts more emphasis on partner capital, waterfalls, carried interest, and long-term investment valuation support. Make sure to compare liquid versus illiquid investments, daily or monthly NAV versus quarterly reporting, subscriptions and redemptions versus commitments and capital calls, valuation sources, equalization, and waterfalls. Question 11. How is a management fee typically calculated in a private equity fund? Management fees are usually calculated from the partnership agreement, not from a standard template. During the investment period, the fee might be 2% of committed capital. After that, it may step down and apply to invested capital or remaining cost basis. I would also check for fee offsets, excluded investors, side letter terms, and timing conventions. The calculation must be transparent because it directly affects expenses, partner capital, and investor reporting. In your answer, talk about committed capital during the investment period, invested capital or cost basis after the investment period, fee percentages, offsets, timing, investor allocations, and agreement-specific terms. Question 12. What role does a fund administrator play during the year-end audit? During the audit, the administrator provides the books, schedules, and supporting evidence auditors need to test the financial statements. That includes trial balances, bank reconciliations, investment roll forwards, capital activity, expense support, confirmations, and investor allocation schedules. I would respond to queries promptly and keep a tracker so nothing is missed. Good audit support reduces delays, helps the manager meet reporting deadlines, and reinforces confidence in the fund records. Be sure to mention audit schedules, trial balance support, confirmations, valuation documents, expense support, capital activity, investor allocations, answering auditor queries, and coordinating between the client and audit team. Question 13. How do you ensure accuracy and confidentiality when working with investor or fund data? I treat investor and fund data as highly sensitive because it includes capital balances, tax details, banking information, and ownership data. For accuracy, I rely on reconciliations, checklists, source document tie-outs, and independent review. For confidentiality, I use approved systems, restricted folders, secure transfer methods, and avoid sending files casually by email. If I spot an error or possible data exposure, I would escalate immediately rather than trying to fix it quietly. While answering, focus on maker-checker controls, reconciliations, password protection, restricted access, secure file transfer, version control, confidentiality mindset, review evidence, and avoiding casual handling of sensitive investor information. Question 14. What Excel skills would you use in a fund accounting or administration role? Excel is useful for reconciliations, investor allocations, fee calculations, and exception analysis. I would use SUMIFs, XLOOKUP, pivot tables, filters, data validation, and control checks to compare source data against accounting records. But I would not rely blindly on formulas. I would build review tabs, tie totals to the general ledger, protect key formulas, and keep a clear audit trail so another reviewer can understand the file. Make sure to cover lookup formulas, pivot tables, SUMIFs, reconciliations, data validation, error checks, formatting for review, audit trails, and understanding the underlying accounting rather than relying blindly on formulas. Question 15. Tell me about a time you had to handle a demanding client or stakeholder under pressure. In a client service role, I once had a stakeholder request a report earlier than the agreed deadline because their senior team needed it urgently. I first clarified what information was essential, then prioritized the key schedules, and communicated what could be delivered immediately versus later. I stayed calm, gave realistic timelines, and had a colleague review the output before sending. The client received what they needed without compromising accuracy or controls. In your answer, use a concise STAR structure. Highlight listening, prioritizing facts, communicating timelines, staying calm, solving the issue, documenting follow-up, and protecting both service quality and control standards. If you are still with us, congratulations. You are much ahead of the rest and serious about preparing for your interview. We hope we were able to add value to your preparation and create some helpful content. Do not forget to like and share this video. Your small act can do great things for us.